Good afternoon, everybody. My name is Andy Chamberlain. I am the Deputy Director of Policy at IPSE. Thank you very much for joining us this afternoon for this webinar. First things first, could I just check that you can all see the slides? You should have a slide in front of you saying IR35, what you need to know, and that you can hear us. And if you could write in your box whether you can hear us and you can see the slide, that would be very helpful. Thank you. While you're doing that, I will, that's good, lots of positive feedback on the seeing and hearing, which is great. I'll just let you, some of you may not be familiar with IPSE, so I'll quickly let you know who we are. We're a membership body, we're not for profit. We believe in the UK being brilliant environment for self-employed people. So we do a lot of lobbying and we also offer advice and products to our members at the same time. I'm joined today by Nicola from Kingsbridge.
Hi everyone, yes, my name is Nicola Hayman. I am the legal manager for Kingsbridge Contractor Insurance. We are an insurance broker. We insure over 50,000 limited company contractors. And we also have partnership with around 500 recruitment and accountancy firms. We provide a business insurance that is a bespoke package of cover designed to meet the needs of independent professionals like yourselves on the webinar today. So I'll touch a bit further on about what Kingsbridge have been doing and what we've seen in the market around the changes, but for now I'll leave it to Andy to give us an introduction of IR35.
Thanks, Nicola. I should also say that if you have any questions at any stage, just write them in the chat box and we will do our best to get to them. But we actually have a huge number of people subscribed to this. So if we don't get a chance to answer your question, then I'll probably write something up if there's any outstanding questions and put it on the IPSE website, where I try to address some of those issues that were raised that we didn't have time for. But our ambition is to talk to the slides for about half of the time that we have and use the remaining time to have more of a discussion and answer any of your questions. So without further ado, I will crack on. I should say that what we're going to do is look briefly at what IR35 is, what it means. I think a lot of you already have quite a bit of knowledge about it, so you'll sort of know that stuff. But I'm just going to touch on it. And then we're going to go ahead and look at what happened in the public sector in 2017 and what the proposal is for April 2020 next year in the private sector. So IR35, what is it? Well, unfortunately, it's quite complicated and quite boring, but unfortunately, you can't ignore it. So I often say it's a deadly cocktail of complexity, tedium, and importance. It's complicated because it's very hard to know whether IR35 applies to any particular engagement. And I'm going to touch on how that is determined. That's called status determinations. How do we determine whether IR35 should apply or not? It's boring because most people think that tax is boring, and it is a tax thing. And it's important because it will affect how much money you take home at the end of the day, and it can be quite significant difference. And also because the government have prioritized this area of policy. At a time where they're not doing very much at all about tax and the tax system, they are pushing ahead with this for the time being. I'll also touch on whether I really think this is going to happen or not. I mean, at the moment it is the policy, but there is quite a lot of turmoil around in Parliament, as you may have noticed, so everything's slightly more up in the air. So IR35 is all about, are you a disguised employee or not? And if you are deemed to be a disguised employee, i.e. someone who is acting like an employee, but is pretending to be something else because they're operating via their own limited company, they might be sort of aping a business, but in fact are acting just like an employee, then that's where the government and HMRC would say IR35 should apply to those engagements. But how do we know if someone is a disguised employee or not? How do we know whether really they're acting like an employee? Well, this is all based in case law, and the seminal case on this goes back to the 60s. It's called Ready Mixed Concrete. And they established three main tenets of employment status. And these are the three that you can see on the screen in front of you there. Personal service, mutuality of obligation, and control. I'll briefly talk about each one of these, but as I said before, I think a lot of you might know some of this stuff. And if there's any burning desire, I can do another webinar where I look at these things more in detail. But for the time being, let's go over these pretty quickly just to give you an idea. Personal service, often referred to as substitution. Can you send a substitute? If you have a right to send a substitute in your place to do the work for your client, that means that IR35 doesn't apply. However, Revenue have been very strict on the application of this rule, and they say that you must have an unfettered right to send a substitute. In other words, you don't go and ask your client for permission. You just say, client, next week it's not going to be me, it's going to be Susan, and that's it. That's all there is to it. If you have that right, basically it means IR35 doesn't apply. But it is getting increasingly difficult to prove that you have that right. And even in instances where people have sent a substitute, HMRC have wanted to know, well, what were the terms of that substitution? Did the client concede to that? Did they have to give their, were they complicit, or were they, did they just accept it? Mutuality of obligation. This one, you could have a whole day-long seminar about this. So I'm going to go over it pretty quickly. It's a highly contested feature. In other words, people define it differently. HMRC have recently taken an extremely strict, and I believe quite extreme, definition of mutuality of obligation. They say anytime that there's a contract, there are obligations on the parties to do something for one another. Therefore, mutuality of obligation applies. Fortunately, the courts don't agree with that, and very often they say, no, that's not the case. In order for mutuality of obligation to apply, the obligations must extend beyond that. And the best way of thinking about this is, if you imagine an employment relationship, an employee will have to do quite a lot of things for their employer, which extend beyond the scope of a specific project. And an employer will have to do lots of things for an employee, like look after them when they're sick or when they go on holiday, or provide them training. That's mutuality of obligation. So somewhere in the middle, you cross a threshold and you say mutuality of obligation applies. If it does apply, it suggests IR35 might apply. If it doesn't apply, technically IR35 doesn't apply either. The last one is control. This one's probably one of the more important ones in terms of what the courts are looking at more recently. This is all about who controls the work that's being done. And in an employee-employer relationship, the employer controls the employee to a very significant extent. In a contractor relationship, it shouldn't be like that. The contractor really should be sort of saying, okay, what do you want me to build a website? Fine, I'll build a website. Okay, you want to use the company colors? I get that. But now I'm going to go away and I'm going to do that work, and you're not going to tell me how to do it. There you would argue that control doesn't exist, and therefore that IR35 doesn't apply. Now that's a very broad brush overview of those three main things. The final thing I'd say on them is that in order for IR35 to not apply, you simply have to knock out one of those pillars. So even if you can't send a substitute, and even if we somehow manage to determine that there are mutual obligations, if you're not under the control, then IR35 doesn't apply. And it works the same for the other ones. That's the sort of technical view. In fact, the tribunals will look at all of them and build a picture overall. But that's technically what I'm saying there is correct. Very quickly, there are other factors which will be considered as well when determining IR35 status. These are often referred to as the business and own account tests. And what they're looking at here is, sometimes they look at, are you part and parcel of the organization that you're working with at that time? If you are deemed as part and parcel, and how might they do that? Well, maybe you have line management responsibilities. Maybe you attend team meetings. Maybe you're integral to the kind of workings of the organization. If that becomes the case, then it begins to look as if you're in a more of an employment type relationship with your client, and that begins to point to IR35. Does your business have financial risk? If you make a mistake while working with a client, do you put that right in your own time or on the client's time? These are things which will be considered, and you can kind of guess. The final one on there, when I first started doing this IR35 stuff about 9 years ago, I joined what was then PCG, is now IPSE. I was trying to work out all this IR35 business because I had no idea about it. And someone said to me, well, if you go to the Christmas party, you're caught by IR35. And I thought, right, that's it. That's easy now. If you go to the Christmas party, you're caught by IR35. In fact, I've looked through all of the cases since then. I don't think it's ever come up whether if you going to the Christmas party is an issue or not, but it's become a sort of a myth, and you can see what they're getting at. If you go to the Christmas party, which is normally for employees or staff, it makes you look like you're an employee or staff of the organization. If you don't go, it makes you look like you're more in a consultant or supplier role, and that's what you're looking at, trying to establish if you want IR35 to not apply. I'll just quickly mention that at the very top there, you'll see Kay Adams, the name Kay Adams next to the business owned account test. The reason why I mentioned that is because Kay Adams is best known as being one of the loose women, the ITV program Loose Women. But she also had another show for the BBC called The Kay Adams Show. And HMRC wanted to take a look at that. And this was a recent tribunal. They said that when Kay Adams was providing services for the Kay Adams Show, she was acting more like an employee of the BBC, and therefore IR35 should apply to income derived from that engagement. What Kay Adams managed to argue was that, well, I had quite a lot of control, and there's not really mutual obligations. She couldn't get past the personal service thing because it was called the Kay Adams Show, so it's quite difficult to argue that anyone could do that show, though I think it was guest presented at times. So what they decided is that they'll look at the business on own account test, and that is where they said, because Kay Adams has this other income, mainly and most visibly from the Loose Women and ITV contract that she has, that means that she's in business on her own account and IR35 doesn't apply. That's interesting because, as Nicola will explain to us a little bit later, what they're going to do in the private sector is they're going to change who has the responsibility for thinking about all of this stuff. And if the end client is going to have that responsibility, which is what the proposal is, how is the end client going to know about your other engagements and what other income streams you have? So sort of an interesting little dilemma there, I think, for the proposal, which I just wanted to flag up. Now, everything that I said there, all of that stuff, what happens is you have to consider all of that, and then if IR35 is deemed to apply, then you pay a bit more in tax. They're essentially looking for the tax that they would have had that engagement been an employment. That's how it works. The government felt that people weren't complying with those rules because all of the liability and all of the responsibility to consider all that lay with the contractor and with what is known as the personal service company, the contractor's limited company. That's the entity which legally had the responsibility for working out all that stuff and thinking about, did I go to the Christmas party, or am I integral, or is there mutual obligations? And they were the ones who were on the hook for the tax if HMRC decided that they got it wrong and in fact they should have been operating IR35. Government felt that there was widespread evidence of non-compliance with the legislation. We haven't really seen that evidence, actually. And incidentally, given that HMRC have lost 6 out of the last 7 IR35 cases that have come to light, including the Kay Adams one, it would suggest to me that there's not as much non-compliance as they believe there is. But anyway, this was their rhetoric. And they said that only 1 in 10 personal service companies who should be operating IR35 on their income are doing so. And this is costing us 440 million a year. So what they said they'd do is they would change the rules in the public sector only. Now, they've sort of gave an explanation for why they were going to do it in the public sector only, which was something like public sector organisations have a special responsibility to ensure tax compliance throughout the supply chain. I don't really buy that. It never made much sense to me why the rules should be different in the public sector or the private sector. And obviously, they now think that too. That's why we're all here today. But I'm getting it slightly ahead of myself. So let's look at what they did in the public sector, because this is the sort of blueprint for what they're talking about doing in April next year. They said that going forward, I don't like that expression, from now on, from April 2017 as it turned out, IR35 status will be determined by the client / the agency, not the contractor. Actually, it was determined by the client. The end client is the entity which ultimately receives the benefit of the work being done by the personal service company or the limited company contractor. They will have to work out all that stuff. You know, can they send a substitute? Who's got control over this relationship? Are there mutual obligations? All of that stuff would have to be in the public sector, determined by the public sector body that was the ultimate hirer in the supply chain. The other big change that they did was that they said, once that decision has been made, and if the decision is that IR35 does apply to that engagement, then income from that engagement must be taxed at source, just like it is for employees. So you take the contractor or the contractor's limited company and you basically put it / him / her onto the payroll, and therefore they are now receiving money which is net of tax, just like an employee does. And it's PAYE, real-time information, exactly the same. That was the public sector only for now, they said. The other things to point out there was that there would be no employment rights. So they were very clear on this. They said this doesn't affect your employment status. Just because we're saying that you're basically acting like an employee and that's going to affect your tax position, that's not going to affect your employment status and whether you should receive employment rights. Now, I actually have quite a big issue with that, and not everyone agrees with me on this, but I think that it's much more difficult now that the client is deciding, okay, you're basically acting like an employee of mine. I'm going to tell you what to do. I'm going to treat you like an employee, but I'm not going to employ you. I think there's a paradox there, and a difficult one that we're going to see more problems around. And the final bullet point there was the Employment Status Service, which was the initial name for the CESS tool. Some of you may have heard of the CESS tool, Check Employment Status for Tax, which we don't like, which we could have a whole nother thing on. But this was a tool which was introduced mainly, basically, to help public sector organisations work out, God, this is a nightmare. How do I decide whether IR35 applies or not? Oh, I can use this CESS tool, and that's going to help me do it. Lots of people don't like the CESS tool, by the way. I'm one of them. It was there. That was its first incarnation, was the Employment Status Service. Now, we thought straight away we were worried about this. We thought that there would be problems with this measure. We predicted correctly that public sector bodies would be risk averse, that they would not want to take on the risk of saying that their engagements are outside of IR35, because HMRC could come along at a future point and say, oh, we think you got that wrong, and now we want all of the tax which we should have had you put those people onto the payroll. So it's a big risk for those public sector bodies. What we feared would happen is that they would simply say, I am unable/unwilling to do these complicated assessments on all of my engagements. So I'm going to say IR35 applies to everyone. That's called a blanket decision. And I'll talk a little bit more about that when we look at a couple of quick examples that I've got. We said that contractors would leave the public sector because they, why would they want to stay there working for a client who's telling them they're working inside IR35 when perhaps they're not, when they could just go to the private sector where they won't have that problem and they would retain the responsibility for working out their own IR35 status. This would result in public sector services being under-resourced and not delivered, and public sector would have to pay more to get work done, and there would be some sort of argument about employment rights. Now, a short time after the rules came in, so these public sector rules, they came in April 2017, and a short time after that, we did a survey, a joint survey with the Chartered Institute of Professional Development, and we reached out to contractors who were affected, and they reached out to hiring managers. Essentially, they reached out to people who were inside public sector organisations who were responsible for hiring contractors to see what they made of all the rules. And we found that 31% of the contractors that we surveyed said that they had been working in the public sector prior to the change, but they weren't afterwards. And 2/3 of them attributed this change to the new IR35 rules. So just breaking that down a little bit more, you can see those sort of top 3 bars there. They could all potentially come into that mix, but certainly the first 2 were people that kind of said, I terminated my contract early. I walked away from that business because I knew that these rules were coming in. And most of those people were even saying, I didn't even get into a conversation because I knew that it would be a nightmare. So I just terminated the contract. Another 30% said, well, I saw this coming down the line, and I just said, I'm not going to sign a contract that extends beyond April 2017 for a public sector organisation, because they didn't want anything to do with it. And other people sort of said, well, my contract naturally came to an end, and then I chose not to work in the public sector after that. The hiring managers, what did they say? Well, this was backed up. They backed up what the others were saying. They said, look, 75% of them said it had become harder to recruit contractors since the rules had come in, and 71% said it was harder to retain contractors. So big problems in the public sector as a result of these rules coming in. I know that I'm going fairly quickly over this. I just want to make sure there's enough time to answer questions, because there's so many people signed up to the webinar that I'm sure there will be quite a few questions. We're going to do our best to answer them. So apologies if I'm going a bit fast, and hopefully we can answer your questions by the end of the hour anyway. Quickly going to look at some examples, just a couple of them. So TfL, Transport for London, it was reported in the media that they had problems as a result of the IR35 rules. When the rules first came out, they did the blanket thing. They issued some guidance and they said, we can no longer hire contractors and not put them on the payroll. Everyone has to go on the payroll as a result of these rules. And what they found is lots of people left. And as a result of that, they had to report an annual report, so they had project delays. And the story kind of made it out into the media. And TfL did latterly then revise their approach. They realized that in order to continue to operate commercially, they were going to have to put more effort into this IR35 compliance thing than simply saying, oh, everyone's inside. The NHS was another big problem. This was reported quite a lot in the Times around the time. Locum doctors in particular felt very aggrieved by the new rules because the trust received some advice from NHSI, or NHS Improvement, which is the kind of overseeing body which looks after the trust. And NHS Improvement said to all the trusts, look, these rules are coming in and you're just going to have to put everyone on the payroll from now on. And the locum doctors, a group of them got together and formed a group called the Locum Doctors Union. There's another group, which I think was a split off that, called the Independent Health Professionals Association. And you can look these groups up and they have Twitter accounts and things. And we at IPSE have met them and know them a bit. And they weren't going to take it lying down. So they ended up engaging the services of a barrister. And the barrister launched a pre-action protocol for a judicial review against the NHS Trust. Essentially what they were saying there is that the legislation actually has a provision in it about reasonable care. And this can be interpreted in different ways, but what the argument was is that the NHS Trusts are not taking reasonable care. They are not acting according to the legislation, and therefore we're going to launch a judicial review about this process and the decision-making process which led to them issuing this guidance. And the NHS revised their guidance pretty quickly after that. They realised that perhaps they were on a bit of a sticky wicket with that one, so they revised their approach. So with the TfL one and the NHS one, what we can see is that there was this initial kind of really bad implementation of the rules, which after some difficult times and difficult disputes and arguments, and indeed the threat of quite serious legal action, a judicial review is quite an involved judicial process, they revised their approach. So IPSE was never in favour of that legislation coming in, and we knew that it would cause problems. It did cause problems. I mean, you can see the quote there from the British Medical Association saying that it had been an administrative disaster for the NHS. So, and these problems do continue. It's got better, and there are people who are managing the rules well, but there are still disputes, and there are still people who are probably being shoved into the wrong tax bracket. I'm going to hand over now to Nicola, who's going to talk through the new proposals for the private sector.
Thanks, Andy. Yeah, so this is all why we're here today, to understand exactly what's going to be the position in April next year. So it was in the 2018 budget that the Chancellor announced that, subject to some consultation exercises, broadly the same changes were going to be rolled out into the private sector, save that small companies would be excluded. Now, I'll touch on that in the next slide of exactly what constitutes a small company. So to reiterate, medium and large private sector end clients, rather than your PSC, your personal service company, will be required to make the determination of your IR35 status. So that responsibility is shifting from the individual to the organisation that you'll be providing services for. Now, a slight kind of confusing aspect is this concept of a fee payer. Now, that was still introduced with the public sector changes, but if you have a recruitment company in your chain who is paying you, then they are the fee payer. If you contract directly with the end client, they are obviously the fee payer and the engager. It is that fee payer who is required to account for the relevant IR35 liabilities on the payments that are made to your PSC if an inside determination is made. So that means in cases where the status is successfully challenged by HMRC, in the first instance, all liability is going to rest with that fee payer, as long as the status determination has been passed on successfully, which again I'll touch on the next slide exactly how that will work. So from a technical perspective, it can't be ignored that the liability can transfer to end clients in certain circumstances, albeit not a significant risk, as long as that end client has used reasonable care, which Andy touched on. There are also some additional changes that build on the current public sector regime and are also going to apply to the public sector. So that those changes will apply across the board, apart from that small company exemption. On the 11th of July, we saw draft legislation which clarified all these extra tweaks that they would be making. And here's just an outline of some of the tweaks that we've seen. So starting from that first point, the cascade of status determination. So a bit of jargon for you now, the SDS, they refer to status determination statement. So it is that end client that needs to provide that status determination statement of whether you are working inside or outside. Now that determination, as well as being passed down the chain, with how many intermediaries there are there, as long as it gets to the fee payer, also now has to be given to the worker, the PSE, the contractor. So there's a different responsibility now that you have to receive that determination. There is then that requirement for each subsequent party in the chain to pass on the determination and the reasons for the determination until it reaches the fee payer. Now, any non-compliance, which moves us into that second point, can result in IR35 liabilities remaining with that defaulting party, so whoever didn't pass on that determination. So I won't go into too much detail about the liability transfer. Ultimately, what I want you to take away from it is your end clients need to make this decision, and they have to do so using reasonable care. If they don't use reasonable care, that liability could potentially transfer. There are some other situations, such as it not being transferred down the chain, that can also leave another party liable. Client-led status disagreement process. Again, another situation where the client could be sat with that liability if they don't comply with it. Now, this one's quite an important point for PSE contractors, because this is where you are allowed to dispute that decision that has been made. So your end clients must put in place a process for dealing with status determination disagreements. So if you as the worker or the fee payer, which might be a recruiter, makes a representation to the end client that you disagree with that statement, that end client has 45 days in which to either affirm to the complainant that it stands by the decision or that it agrees with the decision. In which case a new statement must be issued that states the prior written statement is withdrawn. Now, this isn't a formal appeals process, but it's better than nothing, and it is still a challenge process that means you can push back on that determination that has been made. CEST, Andy's already touched on CEST, highly disputed area. So it stands for Check Employment Status for Tax. The tool's being tweaked right now by HMRC. At the moment, it's around 15 questions. It takes around 5 to 10 minutes. They've stated it's for advisory purposes only. It's not a mandated tool. It doesn't take into account all the factors that Andy went through on those slides. They've said they'll issue a revised CEST tool by the end of the year. And although much criticised, and I do agree with some of those criticisms, it can give you an idea of the approach that HMRC is taking and the indicators that they're looking for. So it is worth having a look at it, after we've come off this webinar, if you haven't gone through it already. And then finally, that small company exemption. Now, this means the old rules that you currently have in the private sector will apply when you are providing services for a small company. So that small company is not your recruiter, it is that end client. Now, the criteria for being a small company is 2 or more of the following requirements. and that's an annual turnover of not more than 10.2 million, a balance sheet total of not more than 5.1 million, and a number of employees not more than 50. So it's 2 or more of those requirements, and it's that end client. So if your end client falls into the category of being a small company, the old rules exist and you will carry on as you were. You as the PSC are responsible for making your determination of being inside or outside, and therefore making the necessary tax deductions. Now here we have an illustration of where that liability might sit. I don't want to go through it in too much detail, but just to give you an understanding, and we'll obviously share the slides after, it shows you the difference between where a client is small and where a client is large. So if we look at that first scenario, you have your end client, you then have the PSC, and then obviously the work through the PSC. Your PSC, as you are today, is responsible for making the status decision and responsible for making necessary tax deductions. New world, when the end client is large, there's a few different situations that sets out when you have a recruitment company in the chain and when you don't. So the first example is where you are a direct contractor. You're providing services directly to your end client. They are responsible for making the status decision and that liability. And then we have 2 examples here of where there's a recruiter in the chain or a managed service provider, and it is that party closest to the PSC, the one that is paying your limited company, the fee payer, that takes that liability, and they take on that responsibility for making it. So I think there's one last example on the right hand side that is around outsourced services. There's a lot of confusion around this in the market, statement of work, outsourced services, and if you have questions around it, please just pop that in there. But ultimately, outsourced services, if it is you are delivering a genuine project and they are not delivering people, it is labour and they're providing time and materials against an outsourced service, then it can be out of scope of the rules. So IR35 wouldn't apply. Now, if you have any questions on that, like I said, we can take those, but it's quite a long subject to get into. And then what is the government currently saying at the moment? So we've had draft legislation that was published on the 11th of July. It's worth having a look at that. And we've now had guidance. So that was published a few weeks back. They published new guidance and they updated existing guidance, and you can view them again on gov.uk. So for the time being, they're sticking to their lines. Self-employed won't be affected. So the genuine self-employed won't be effective. It's an anti-avoidance measure, and they are hoping it will bring 1.1 billion in the first year. And I think what I would take away from this is their statement is that 1 in 3 contractors should be deemed inside of IR35. Now, these statistics can be up for challenge, but what we don't want to take from it is the end of contracting as we know it. The IR35 rules on deemed employment haven't changed. It's just the party that's responsible for applying the rules, which was obviously previously your PSC. There's no changes to the employment status test. The flexible contracting market that we have in the UK is great. It is still set to grow. And I don't want you to all leave this webinar thinking that this is the end of it, but there are some practical steps that we can take. Andy will go through a bit about what IPSE have been doing, and hopefully at the end of the webinar we can give you some next steps that you can take going forward.
Yes, so I said that I would talk a little bit more about whether we think these changes are really going to come in. So the answer is yes, probably. We have draft legislation now. So typically when you get that far down, there's really no going back. And it's very, very hard to persuade the government who's published a draft legislation to persuade them to not put it into the finance bill and therefore to implement it. However, we have a government which has a minority. They're fall short of having a majority by about 40 MPs at the moment. They've had 6 votes in Parliament and lost them all so far. They've all been about Brexit, of course. I can't see how this government are going to get a finance bill through at all. Or even if we have a situation where perhaps there's a school of thought which says the government's going to come back from this controversial prorogation break, which of course is being examined in the Supreme Court right now, and they're going to introduce a Queen's speech, and the Queen's speech won't get through. I mean, how's that going to get through? They're definitely, the opposition parties will vote that down, and that would probably prompt some kind of vote of no confidence, in which case there'll be a 2-week period where another party tries to form a government of national unity or parties, and if failing that, there'll be a general election. In amongst all of this, they do need to have a budget this year, and they need to get these rules through in a finance bill. It's very possible that whoever is forming the government will say, we're going to strip away everything that's controversial from the finance bill, and we're going to put through a really basic finance bill, which is going to enable us to continue to raise taxes and all the rest of it that we need to do to govern the country. And so there are these routes out of this that I can see as potentials, but they are just potentials. Unless something changes, the private sector rules will be effective from April. We at IPSE do expect this will cause a lot of disruption. We have lobbied very hard to oppose the measure, and we continue to lobby. The fact that we have a new Chancellor, I mean, not that new anymore, is he? It feels like Sajid Javid's been in post for quite a long time. Boris Johnson's premiership feels like it's been around for a long time as well. But since these rules were kind of introduced, we've moved from having Philip Hammond, who I think really did he actually, unusually somewhat for a Chancellor, he really understood this area of the tax system, and he believed that he was doing the right thing. So it's very hard to dissuade him of that. We don't know what Sajid Javid thinks about it. We certainly don't know what Boris Johnson thinks about it. But you can imagine a world in which they will want to sort of throw a bone to business and say, you know what, this looks a bit complicated. You don't seem too happy with it, so we're going to, delay it for a bit. These things are all possible. In the meantime, we are pushing for that to happen. So we are working with the CBI. The CBI, of course, their members are the end clients usually in this. They also have agencies, and we're a member too. So we've been working with them to try to understand what your members think about this. And the end clients aren't thrilled about this. This is a nightmare for them to have to deal with. So no one's happy about this. These rules are basically ridiculous and complicated. No one understands them. Does mutuality of obligation apply? What does that even mean? No one can find out. What a nightmare. So let's push this back a bit, please, Mr. Chancellor and Prime Minister. That's our sort of message. We've got the Financial Secretary to the Treasury speaking at our fringe event at the Conservative Party in 2 weeks' time, or just under 2 weeks' time, and that's Jesse Norman. We will be impressing upon him the deeply held views of our members on this issue, and trying to get him to understand that this is not the right time to bring in really complicated rules like this, which we believe will restrict the labour market and kind of dumb down some of the vibrancy and the vitality of the UK economy at a time when we're leaving Europe and we should all be a bit worried about that economy. So in many ways, there's a logical argument to say that this is too difficult to bring in now. Whether or not they'll go for it, I don't know. It will all depend. We could have another government by the time April rolls around next year. It could be Jeremy Corbyn in number 10 and John McDonnell in number 11, in which case I would suggest to you, and this is perhaps just my own politics coming through here, that IR35 will be the least of our worries, and there'll be all sorts of things that business won't like that they're doing. But anyway, we're carrying on with that. So we're going to reinvigorate our letter writing campaign. We want all of our members to write to their MPs, all of our non-members to write to MPs, and let them know why this will affect you. You don't want this to happen. You're deeply worried about it. You don't think it's fair. It's unfair on the smallest businesses in the UK. And just keep that pressure up on the government to let them know that business doesn't like this. And so if they're a pro-business government, they shouldn't be doing it. That's the kind of message that we're trying to get through. I'm just going to quickly, sorry, Nicola, I'm just going to quickly touch on the bullet point you can see in there about Susan Winchester, because this is this relates back to the employment rights issue. Susan Winchester was a member of ours who came to us and said, look, my client has decided that IR35 applies. I was happily working for them pre-April 2017. Now my public sector client is saying IR35 applies, and I am getting massive tax deductions. I've been pushed into an umbrella company, and the umbrella company is basically deducting 52% of the gross pay, which I noticed someone else wrote in with an example of that. I'm sorry, I'm trying to keep my eye on the questions, but I didn't catch your name, but someone else talked about that 52%. I absolutely recognize that number. And they're deducting employees NI, PAYE, but also employers NI. and apprenticeship levy as well. So, you know, all these crazy deductions which you shouldn't really be paying. And how can I challenge this, Susan said to us. So we went to see a solicitor and ultimately a barrister. And the barrister said there's nothing that you can do. There's no appeals process in the public sector. That's slightly changed, as Nicola touched on now, with the client-led dispute resolution service. But what we can do is make a claim for holiday pay and say, look, if you're saying that Susan is inside IR35, you're saying that she's not self-employed, and therefore you should be giving her some kind of employment rights. So we took this on, and it was slightly counterintuitive because there we were, you know, preparing to go into a tribunal and argue that one of our members is not self-employed, which usually we're trying to do the other thing. But it's the hypocrisy of it. We're trying to say it's one or the other. Unfortunately, and of course, I should say that the reason why we were so delighted to take that on with Susan is because she explained to us that her client was HMRC, which was a sort of delicious irony to the whole thing. So there we got a chance to really stick it to HMRC. Now, HMRC and the agencies and the umbrellas in the supply chain, they were all respondents in the claim. They ultimately settled and kind of threatened us with massive costs if we pushed it to the tribunal. We settled on the steps of the tribunal. We were there. It took months to get to that stage, but we settled. They gave Susan everything that she was asking for, and we were allowed to talk about it and name them. So we somewhat reluctantly accepted the settlement. But I think there's going to be more of these challenges. I think employment rights is a big problem area. As well as all this lobbying and trying to make our points on this, we are also helping clients and contractors to prepare for the work, well, not necessarily the work, but prepare for what the legislation is going to require them to do unless it changes. And we have template contracts in place. Members can access those. We have IR35 friendly contracts. That's what we say. In other words, that contract strongly indicates IR35 should not apply to that engagement. And we have contracts where you might say, well, this is what an IR35 relationship would look like. And we're trying to help contractors and clients to work out that they can continue to hire contractors and they can continue to work with them outside of IR35 as long as they have the appropriate working arrangements in place.
And I'll just quickly whiz through a bit about what we've been doing at Kingsbridge and what we've been seeing since the changes were announced. I guess one of our messages that we're kind of pushing a lot is if your assignment that you are working on is legitimately outside of IR35 and is on the 5th of April, there is no reason that you shouldn't be able to complete that assignment outside of IR35 on the 6th of April. And where we're really pushing is to make sure that we don't see those knee-jerk reactions that we saw happen in the public sector, and we're trying to do this by as much education as we possibly can. We're also helping our contractor base and our recruiter base by making sure that all contractors that are operating outside of IR35 have the adequate business insurance cover in place. We've got a quote on there from Osborne Clark, which is a leading law firm in the kind of recruitment space, just talking about the importance of holding that insurance if you are working independently. And the report that we've completed recently with EY is two different things, a survey of our contractor base where we got just under 3,000 responses. And we also had our whole contractor base reviewed by EY, which was just under 42,000, to kind of have a look at where we think the risks might be for Kingsbridge and hopefully the sectors that we work in a whole. Now, that risk came at around just below 20%, which is obviously lower than HMRC's 1 in 3, but still higher than what we want to see. So that's why all this engagement, these webinars, these events, we actively encourage contractors, clients, recruiters to really get involved and make sure that we can make this impact as minimal as possible and allow contractors to continue working outside of IR35 and help support that growth of the flexible workforce. We've also got a legal expenses cover that comes along as an add-on to Kingsbridge's general business insurance. Now this is already held by around 15,000 of the 50,000 that we insure, and that obviously covers for the defence costs and it covers for fines and penalties should there be any. Now, we're building on that to make it even better, and obviously tweak that wording that it will cover whoever in the chain is left liable, now that there's lots of ways it can shift around. So hopefully with all the education and all the kind of activity that we're doing, along with insurance as an add-on for genuine compliant contractors, it means that we can make that impact even less. Now we've got a few points on here that I'll quickly run through so we can get through some questions, but these are just some takeaway points of next steps, because that's really the point that we want to get to. Talk to your end clients, talk to your recruiters, find out that what they're doing, understand this new process, understand how you're going to get your SDS, your status determination statement, understand what defines status. So those points that Andy touched on at the beginning, do some research, find out what it is that HMRC are looking into, get familiar with the CES tool, just so you can see the kind of areas that it touches on. Check your insurances. Obviously you can contact me after the webinar if you need any further advice around the insurance side of things, but check you've got those in place. Check your working practices against your contract, potentially renegotiation of rates. You might want to consider other models where necessary. If you are sure that you are definitely inside of IR35, then yes, have a look at umbrellas or PAYE or potentially going perm. There are other models out there. Be very careful of any sort of unscrupulous companies, any sort of company that is offering you very high take home. Please be aware of it and please be careful. Do your research and speak to the expert. So mine and Andy's details are on the next page, and feel free to contact us after the webinar should you have any further questions.
And Nicola, just on that unscrupulous companies, it's a very good point. The loan charge, some of you will be aware of it. A lot of people got involved in companies offering them these, what are now described as remuneration schemes, loan arrangement schemes, employment benefit trusts. And they were ushered into that, in fact, by the original IR35 rules coming in the year 2000. People fleeing what they feared was this very difficult IR35 world went into these models. And now we're seeing massive problems with the loan charge. So, I mean, I couldn't emphasize greater my agreement with your point, Nicola, that be aware of unscrupulous companies. I mean, really look into it. My advice really is, if people are offering you big take-home numbers, then to me, it's a massive red flag, a huge warning, and you could be storing up big problems for yourself later in life. So just be careful of that. We've had quite a few questions come in. I've been furiously scribbling them down, so I'm going to try and sort of cover off a few of them. But there's been a bit of confusion over where the liability lies for determining status, and this difference between who's going to determine the status and then who's going to be responsible for ensuring that tax is deducted. So someone said, is the agency responsible for determining and applying the tax? No, they're not. The end client is responsible for determining the status. They then pass that information down the supply chain. So they say, look, I've looked at it, IR35 applies. They pass that information down the supply chain until it reaches whomever it is who pays the contractor. That's often an agency. And that agency then becomes the fee payer. And the fee payer in that supply chain has the liability for deducting the tax. So that's how that works. Someone else has asked, well, if I change the agency to a small company, the agency I work with to a small company, will that get me around it? No, it doesn't. The small company exemption relates to the end client, right? So if the end client is small, as defined by Nicola earlier on, then you retain the IR35 responsibility. No one else in the supply chain has to worry about it. Yeah, as you were, basically. That's the way it works right now. You have it. So just be a bit wary of that. It's an important distinction there. And look back at those slides. Nicola spoke to that slide where you had the flow of liability going through and the different examples. It's a bit of a tricky one to look at. I'm not criticizing Nicola's slides there. I think we designed that one together. But that really does actually show you who has the liability for what things. Someone else has asked, can I challenge the client's determination? Yes, you can. That's what this client-led dispute resolution service is all about. That's new. You couldn't do it before, which is why in the example I used of our member Susan Winchester, she had nowhere to go. She couldn't challenge it at all. Now you can say to your client, look, I disagree with your status determination. I want you to consider X, Y, and Z, and they go away and they have to come back to you within 45 days, and they will let you know whether they're either going to stick with their initial decision or change it. I'm pretty skeptical about that. I mean, I think you're going to struggle to get a client to change their mind on that once they've made up their decision. They don't really have to. There's nothing in the legislation which forces them to really reconsider things. They just have to say, yeah, I'll have another look at it, and then they just give you the same answer back. I think it's a load of red tape for clients, because I think a lot of contractors will challenge it and they'll say, I don't agree with you, and you know, it will just mean that they'll have to go through or appear to go through some sort of process of reconsidering it. So I'm not the biggest fan, but it is better than nothing, I suppose, which is what we had before. At least you have that route to say to someone, look, you've taken this decision, I think you're wrong, let me try and persuade you otherwise. That is in there. There's a question from Addy, what tax code do they use? Very good question. All of a sudden, you've got to find a tax code for this person. What they tend to do is put you on the basic rate, the BR rate, which means you're paying tax at about 20%, but very often people are earning more than that, so they get into the tax year and they've still got another big lump sum to pay, so more problems there. What about VAT? Does that get affected? Well, what the government want you to do is to continue to charge VAT, of course, and then pay that over to the government, and then you get taxed on the rest of it as if you're an employee. Doesn't make any sense at all, does it? Employees don't charge VAT. It's ridiculous. Some people are saying, if you're going to do this to me, just pay me directly. I don't want the money going into my limited company. In that case, I think that the VAT thing goes away, but check with your accountant, because you can get in trouble, as you will know, around VAT compliance. The VAT man doesn't mess about, as we know. Okay, other questions. If we accept, says Mark, if we accept the IR35 determination of one client, does it impact any future engagements? The answer is no, it doesn't, even if those future engagements are with the same client. IR35 works on an engagement by engagement basis. So in other words, you could have two contracts going on concurrently, and one of them might be caught by IR35 and one of them isn't. You personally are not caught by IR35, your company is not caught by IR35. It is the engagement which is caught by IR35, and it's income from that engagement which must have different tax treatment depending on whether or not IR35 applies. So no, it doesn't affect them. Another question that's come in, we've had this so many times. Nicola, I'll hand this one over to you. Lots of people ask, well, if I accept that the client's determination is right and IR35 applies from April, does that mean HMRC can retrospectively apply IR35 to the rest of the time? Now, I might have worked there for 6 months or 12 months working on that contract, and I've been saying IR35 doesn't apply. I've been treating that as business income and paying tax appropriately. Can HMRC, is it likely HMRC will go back and sort of say, well, now IR35 applies, so presumably it applied before as well?
Yeah, I've seen that question come up a lot. So this kind of retrospective element that people are very concerned with. Now, HMRC have said that this law will apply from April the 6th, and it won't be retrospective. My personal opinion is I wouldn't be comfortable using a limited company as outside of IR35 on an assignment and then switching inside IR35 on the same assignment after April the 6th, and hoping that HMRC wouldn't have a look into that. Then yes, they have said it won't be retrospective, but I would consider that very carefully if you are going to carry on using that limited company on an inside IR35 basis for the exact same assignment that you've been paying yourself outside of IR35.
Yeah, I agree. It is a tricky one, because HMRC, because IR35, the way it works currently, it is retrospective. I mean, that's how it works. HMRC look back and they say, oh, you had this income from here. We think that should have been treated as employment income. In other words, we think IR35 should have been applied. And you look back at the relationship and look at how that was. That's how IR35 works now. So HMRC will always retain the right, or at least for they can go back 6 years. That's the standard thing. They can go back 6 years in time and say, oh, see that money, that should have had IR35 applied to it. They will retain that ability to do that. And yes, I do believe that it could be a bit of a red flag if you've been working with a client for a period of time, let's say it's 12 months, and then you just accept that IR35 applies. HMRC will say, so what, did it just suddenly start applying? Now, my advice would be, at the very least, I mean, you might want to consider not working for that client anymore or for a while at that point, or at the very least, I would say get a new contract in place. What would you say, Nicola?
Yeah, I would completely agree. I think if you want to continue working with that end client, I would be inclined to say you might not want to carry on with that limited company, and you might want to take the money out of it that you've got in there and consider looking at umbrella routes or PAYE options going forward. And also that brings me on to another question that I've seen a couple coming up. Is working through an umbrella company a way out of this? If you are working through an umbrella company, you are an employee. So therefore, your PAYE and taxes are being deducted and IR35 does not apply. So yes, to a certain extent, it is a way out of it because you don't need to worry about IR35 if you are using an umbrella company, but you need to remember umbrella companies are deducting those taxes. So you're no better off if you have been working outside to then move to an umbrella company, because those taxes are still being deducted. And it brings us back to that point of being very careful about any company that you engage with, any payroll, any umbrella company, making sure that you are an employee of that umbrella company.
Yeah, I mean, that's so typically how it very often works in the public sector would be that someone was happily working by their limited company. They had a contract, let's say, with an agency. The agency has a contract with the end client. After April 2017 came along, the end client may have decided, well, IR35 applies. They explain that to the agency, and the agency now has a responsibility to put you or your company, payments to you basically, onto the payroll. Sorry, I just had a note that my battery's running low, but I'm sure we'll be okay. What the agencies would often find is that they don't have the ability to put them onto their own payroll because they might not have the software in order to do that. So they would engage an umbrella company. An umbrella company would now insert itself into the chain, and then that becomes the fee payer, and they're doing the deductions. So you may well find it's not really a way out of it, but you may well find you're being pushed towards an umbrella type arrangement.
Yep. There's also been a few questions around business insurance. Yes, business insurance does mean professional indemnity, public liability, which was one of the questions. And another one was, if you end up being on the payroll as a contractor, do you still need insurance? Now, it depends which model you're going down. If you are continuing to be engaged through your limited company and you are working inside, then yes, you would still look at having insurance, and it won't be for the reasons I was explaining of the way it looks like a good indicator of being in business on your own account and therefore outside, but you would want that genuine insurance to cover you for, other areas of risk. So yes, if you are carrying on contracting through a limited company, you would still want to have insurance in place. If you were using an umbrella or you were a PAYE temporary worker or an employee, you would obviously not need that business insurance.
We've pretty much used up the hour. There's a couple more questions that I've jotted down, which I'm going to address, but we probably are going to have to wind it up pretty soon. Brian, this comes up quite a lot. Brian asked a question and said, well, what if myself and some other contractors formed a consultancy? Could we then offer services to our clients on that basis and stay outside the IR35 rules? I think that the thing there is, if you're providing outsourced services, then you can. But if you're providing labour, then we will look through that consultancy. The end client remains the end client and the client responsible. Are we going to be cut off? Is that how this works? We're not sure. Okay, we think we can keep on going then for another minute or two. The other thing that people talk about a lot is this outsourced services idea, and sometimes it's helpful to try to explain that a bit. So one good example that I've heard of, what would HMRC accept as an outsourced service? Well, if you imagine you've got a bank who's the end client, and they're going to bring in a catering firm to provide food at lunchtime or whatever for their staff. It's pretty clear that the bank isn't involved in catering. They are purchasing an outsourced service. So if you imagine that supply chain, the bank won't have any liability there to make an IR35 assessment on anyone operating as a contractor working for that catering firm. The catering firm will have that because they are the outsourced service. In this example where people talk about, well, what if I form a consultancy and go and work for my clients? If you're really just ultimately going and working for your clients, but you've just organized it in a different way, you're gonna find it difficult to persuade the revenue that you're providing an outsourced service. You have to think, what am I really doing here? What's the real nature of this engagement? There's no magic wand you can just draw something and make it look a certain way. You have to be actually providing an outsourced service, which would typically mean you're providing a client something which they don't have in-house and something that they don't typically do in-house. I think that we are just about coming to an end. I'll just answer this one. What if the end client is in another country? What do you think, Nicola?
Yeah, it's actually a lot more complex than you would first think. There are different things that come into account for this. So if you are providing services through a UK limited company, but you are supplying them outside of the UK for a client that has no ordinary liability for PAYE, then this doesn't apply. Now, where it all gets a bit more confusing is where you are providing services outside of the UK, but that end client or the recruitment company is based in the UK, or they have offices in the UK. And this is where you really need to try and ascertain the residency status of that contractor. So if this is your situation and you are providing services outside of the UK, it's not just a case to say it doesn't apply to me. It potentially might apply to you, and it is definitely worth, if you have a recruiter in the chain, speaking to your recruiter or speaking to your accountant to find out what the situation is, because it might be the case that you are still responsible for making your determination and therefore have that responsibility and liability. But it also might be the case, if that end client does have base in the UK, that they do still need to make that status determination, and these new rules will apply. So if that is your situation, feel free to send me an email after, or alternatively do speak to your accountant or recruiter.
Okay, I think we're going to have to sort of end it there. Thank you so much for all of your questions. I know that we haven't addressed all the questions. We've had about 970 of you online for this webinar, which has been fantastic. And there was probably not much chance we'd ever get to address all the questions. But what we're going to try and do is bundle them up into some sort of piece which we'll share on the website. I'll share it with you, Nicola. You can share it around. We'll try to address them in one way or another. You can also contact us at Twitter. IPSE, we've got two or three handles. We've got Team IPSE. We've also got IPSE Westminster. So contact us there. Contact us via our website with any other questions that you may have on IR35. Thanks very much for listening. Thank you.
Thank you, everyone.